when it comes to sectors, consumer staples leading the way, along with utilities, a little defensive play there, and then energy is pulling up the rear there. So the countdown is on, just under 4 hours before we get those first batch of big tech earnings. Alphabet and Microsoft both out with results after the close. So what's at stake for the market as we await these critical results? Josh Brown, there's so much to talk about, whether it's cost cuts, whether it's AI, whether it's cloud. You pick where you want to go.
Oh, wow. My choice?
Your choice.
I want to talk. I want to talk about volatility, Courtney, and I want to share with you something that we've been talking with our clients about, because I think it really highlights how different the market environment is this year versus what we all lived through last year. You know, we're still trading just about where we were last summer on the S&P, but people seem to feel so much better. I think part of that is because we are staring at perhaps the last rate hike of the cycle later next month. But if you think about volatility, this is a night and day environment. In 2022, the NASDAQ had 46 separate days where it was down 2% or worse. It had 18 days where it was down 3%. If you look at what's gone on this year so far, and I know it's only April, but bear with me, we've only had 2 trading days with the NAS down 2%. We've had 0 days of negative 3%. And even in the S&P, you know, it's a radical difference. So right now, you got a VIX that's up about 5%. Let's call it 18. That is still 1 standard deviation below its mean, which is 21. The median VIX for 2023 is about 19. And the median VIX for 2022 was 25, which is an order of magnitude greater. So even though we're in this situation where earnings are just so-so, we don't have the volatility to match with all of the opinions and all of the headlines. And I think that that's really what's been key so far this year to understand. And in that environment, there's a certain type of stock that tends to do really well, and it happens to be large cap, growth at a reasonable price, and those are the biggest stocks that affect both the NASDAQ and, to a greater extent, the S&P 500. And that's where we stand right now.
Very interesting take. I mean, I hear what you're saying about the market feeling better, but so many others are talking about complacency, or even some of the companies that we've heard from feeling more like they're in a wait-and-see mode. They actually put up some pretty strong earnings, but when it comes to forecasting the future, we're just not sure. Jason, what's your take right now? I guess let's start broader markets before we drill down into some of these mega-cap tech names that Josh is suggesting may do well in this environment.
Yeah, so I think what's super interesting when we think about the market in general, there's been a lot of concern about this earnings apocalypse that we really haven't experienced. I mean, 77% of companies have beat on EPS, and about 73% have beat on revenue thus far. Looking forward to the tech earnings that we'll see. We'll hear from Google, we'll hear from Microsoft this afternoon. I think what we're expecting is some deceleration on cloud, which I think, and for me, I think it's more like right-sizing what cloud growth has been in a normal economy, and I think we'll see some of that. For Microsoft in particular, I think PCs is a concern for me. I think that there's been some PC slowdown absolutely. But I think what's good about this week is we're seeing the entire market. It's not just financials, what we saw earlier in the cycle. We're hearing from other companies like Pepsi this morning that had some really strong earnings. We heard from P&G last week, some of the staplers that are doing well. So I do think I'm relatively optimistic on how earnings have gone thus far, and we'll see how the rest of this week goes.
Stephanie, it's a really big day here for tech earnings after the bell.
Yeah.
What are you expecting out of Microsoft? Jason brings up, of course, the weak PC shipments and sales, which we do expect. What about what's going on in the cloud?
Oh, I think it's all about what's going on in the cloud. And I think this is a very, very big week. We know that all of these companies represent such a big part of the overall market, right? And technology and comm services alone, 35% of the S&P 500. They better do good. But I don't know if they're going to. I know we've all been talking about cloud decelerating. And kind of sales cycles extending 50% from 30% sequentially. We're hearing about price discounts. We're hearing from CIOs who are pulling back on spend. So we're all expecting cloud to decelerate. It's just how much does it decelerate? Then you look at Google. Not only do they have the cloud problems, but they have digital advertising problems, right? There's that. I think YouTube will be fine. Actually, I think that's going to be the bright spot. On Microsoft, they have PC problems along with cloud problems. So there's a lot to digest. These stocks are up 20% on the year. They're not cheap.